Hey everyone, just wanted to hop on real quick and record some of my thoughts behind my day one DDOG trade. Now, if you know me or if you've followed me for a good bit, you'll know that I'm a primarily day two and beyond gap trader. So what that means is, you'll have your gap day and then I'll be trading, a setup that is the HVC on days 2 and beyond. Now, obviously in my pursuit of becoming the best trader I can be, I definitely want to learn how to get into these day one type moves, right? And so obviously as that type of trader, I have begun to study and take a deep dive into opening range breakouts, all that type of stuff to get in these day one moves. Now, I've attempted this morning to, apply everything I've been studying onto DDOG. So this trade, for example, obviously it was a good market, got the HVE, but I wanted to walk through some of my thoughts and just kind of recap my entire strategy and process so that one, I can look back on this video and grow and learn with time, but also to maybe give you an inside look at how I'm thinking. So first things first, I think every one of these day one trades starts with a consistent pre-market routine. And so what I've been doing is going to a specific website, which I'll link in the description, and getting the pre-market moves, right? So here, pre-market movers, and then I'll scan through which ones are up the most. DDOG, I'm familiar with this name based on 2020, 2021, all those type of runs. Obviously the software space or security, software security space is big or has been big in the past. So, when I see a name that kind of fits that bill, I'm more interested, right? And this was already up 20%. So 20% DDOG was the key. It also had traded 2.2 or 2.4 million shares, which represented, about half of the 20-day average volume. So, and that's just in the pre-market, right? So half of daily volume traded in pre-market. Those are all just the, ingredients that go into a big move potentially, right? And so these are the ones I want to start to stack, study, go on. So, okay, we've covered the pre-market. The next step is having a consistent entry tactic plan, right? This is just entry and stop loss. So if this was just going to go, I put this on a 2-minute time frame when I looked at it this morning. You could do 5 minute, you could do 1 minute, you could do 15 minute, kind of whatever fits your style. I'm just testing things out right now, so I put it on a 2 minute. I kind of like it a little bit better than 1 minute. Either way, it's kind of the same thing. So what I saw was this consolidation bar. So I'm sitting here waiting, I'm waiting. The key trigger is obviously the opening range high is, I think, the common knowledge on how to trade these. So we didn't get that. I have this VWAP plotted. I love having VWAP. And I saw this double consolidation, right? So we got two tight closes right under the VWAP. And then I entered through this, I think I had 97.85 orders. So got filled here, and then I had the last order. So this was like a 4.5% position. I added another 4.5% through this opening range high. And then I could have added again here at this 945, kind of pull back into this high, and then we ripped, right? So it worked well. My stops were, pretty simple. If my entry was here, I was right under low of day, about 2%. And then from the highs, it was about, 2.75%. So the idea here is I've managed my risk about 2% max, 2.5% loss, with the potential to, obviously gain whatever this is poised to gain. So I think that's the key. And throughout the rest of the day, not much to see other than just pure buying. Obviously, we closed above VWAP, which I think is important for tomorrow. I'll share more of my thoughts on that later once I've studied a little bit better and have, 20, 30, 40, 50 examples of why that's important. But so we have our consistent entry tactic plan, and then we have our execution, right? And then it's getting out of your own way, I think, was the psychological piece today that I was kind of dealing with. I definitely as we reached highs every time, I was like, oh, this is good enough, just share, or I'll just sell it and revisit tomorrow. But the idea with trading day one gaps, especially for me right now, is to build a smaller position so that day two and beyond, in terms of follow through, I can trade that HVC with a lower cost basis and the ability to size it up a little bit more, knowing I already have some open profits, right? So that's how I'm viewing this. And, this was a good first step. Obviously, not all of them are going to go like this, but there's a ton of other names throughout this earnings cycle specifically where we can, study this exact same setup and see, how does this U-turn work on a lower time frame once we've gapped up, and how does this day one look in terms of holding above the VWAP, coming in with volume, et cetera, right? So, even going back to something like this, May 4th of 23, this was a tradable rally from the HVC, if we're being picky, right? This is a 57% move, pretty much all above the 20 EMA. Let's see if we get something like that, So that's how I view DDOG. That's how I traded it. I'm still long. Like I said, I probably have a 9% position overall. And I'd be looking tomorrow after this HBE to trade versus the HVC, 102, 101-ish area. So again, hope that was helpful. And I'll obviously be, sharing more thoughts as I get more comfortable and familiar and have more insight with the setup. So hope that was helpful. Like I said, we'll talk to you tomorrow. Peace.